So if you are taking notes and miss something, don't worry, because you will get a copy of this via YouTube. Let's see. So again, class rules, stay on mute. Don't share personal information like member number, social security number, anything like that in the chat. If you do have questions, just for the benefit of everyone else, submit them in the chat and Janice will let us know when questions arise. Please interact with us. We are using a new system today. It's called Mentimeter. So if you see at the top of my screen, it says go to www.menti.com. So that's menti.com and use the code 1523-5008. We have a couple of slides in here that will allow you to kind of vote and voice your opinion. That way we can kind of get a good feeling of where everyone is at on this class. If for some reason you are unable to use Mentimeter, definitely still participate with us in the chat and we'll definitely kind of see where everyone's at. And then hopefully you have a good time and enjoy this class and hopefully you walk away, learning something new today. All right. For those of you who don't know me, I am Rachel Calderon. I am the Vice President of Strategic Outreach here at Zing Credit Union. And then I'd like to introduce our partner, Irene Glazer. Irene, say hello to everyone.
Hi, everyone. Glad you're here.
Yeah, so we have our contact information on here. We also have our two mortgage loan officers from Zing Credit Union here on today's class. That's Christy Bruyette and Peggy Hansen. I have their information on other slides in the presentation, and I welcome you to reach out to any of us if you have any questions. So first things first, what is a credit union? We are a not-for-profit financial cooperative. So what does that mean? How are we different from banks? Instead of answering to stockholders, we answer to our members. We are member owned and we return not all, but most of our profits back to the membership in the benefit of lower loan rates, higher deposit rates, less fees than banks. And then we are also run by a volunteer board of directors, which is voted on and elected by our membership. And then, just with everything that's going on in the news, we are really invested in it within our community. We don't have really like niche, investment portfolios or anything like that. We are really concerned with the well-being and success of our communities. So a little bit about us. Our mission is to educate, deliver, and achieve. Again, we are a not-for-profit. So that means that while we don't have the mission to generate millions and millions of dollars, which would be fantastic. I mean, we just reinvest it into our membership and to our credit union by providing, the services and products that our membership needs and wants. We were formed in 1934 by 10 city and county of Denver employees, and we've been around for a really long time. We are really well known for our free financial education program that was established in 2005. So lots of resources. If you go to our website at myzing.com, go under education, you will find all of our different education resources on there. That includes recorded classes like this one. We have a one-on-one financial coaching request form if you really want a more personalized experience. And then we also have some free online e-courses, which are really great primers for different topics like budgeting and credit. Okay, so using that Mentimeter, if you're logged on, how do you currently feel about buying a home? Share with us. Are you ready? Let's do this. Or are you just kind of in the learning phase? Vote now. If you are not using Mentimeter, please feel free to include your response in the chat. I'll give everyone a second. Okay. Looks like we are in the learning phase, which is great. That's why you're here today, right? Okay. Moving on. Okay, so why buy a home? There's lots of reasons to buy a home. Stability, it provides you a safe, constant place to go home to at the end of the day. Your payment is generally fixed, so your rent's not going up. You could have your own yard. It creates generational wealth. There's tax benefits. You get to create equity. Maybe it's easier for you to have your pets in a house than it is in an apartment. So there's a lot of reasons to buy a house. So based off of that, what is your biggest reason for buying a home? I know for me, at the time I bought my house, I had just had my child and I didn't think it was feasible to raise a young toddler boy in a very small apartment. If any of you have kids, you know how wiggly and on the go they are, and just an apartment was just not feasible. Okay, marriage. Okay, making that next step in life. Very nice. Let's see. All right, any other answers?
I want to add, as far as the reasons, Rachel, the
Mhm.
appreciation on the investment, besides all of those, great reasons that are listed there with, being stable and having more control over your situation, your rent not going up, the appreciation, being, in real estate and seeing what has happened in the last couple of years. I'm sure you guys have witnessed it as well. Our average sold price was in the 300s in 2007, and today we're at about 740,000 for our average home price in the Denver metro area. So there's really no other investment where you can put a down payment as little as 3% and it buys you an asset. So, for example, if you're buying a $400,000 home and you're putting down 3%, that's about $14,000, and you have the asset that's worth $400,000. If you were to buy a stock that is, $50 a share, and you buy, 5 shares of that stock, that's all you have. You don't get to have the leverage of that. And then also with interest rates being a little bit higher right now, quite a bit higher than they were, your rent is going to continue to go up. Whereas with owning a home, sometimes your payment can actually go down if interest rates go down and you get to refinance, which all the talk is that they will be coming down. And I'm sure that our loan officers can speak more to that later.
So
So
great. Yeah, so appreciation, marriage, children's space. I saw in the chat investment, all great reasons for buying a home. All right, so responsibilities of, oh, this is you, Irene, sorry.
no worries. No worries. So, obviously I'm a realtor, so I can't stress how important it is to just get in and buy your first home, and it's a stepping stone. When you're renting, obviously you don't have as many responsibilities. You have a landlord, they fix your anything that's broken. You don't have property taxes or homeowners insurance to pay, and you don't have those costs of maintenance. When you're a homeowner, you do have some maintenance. You pay the property taxes and the insurance on the home, and you maintain the property and the land. However, the upside, I think, is just so great. Like as I went over before with building equity and appreciation. When you're renting, you're really just paying someone else's mortgage. So you're paying yourself when you're owning, and when you go to sell, you get that payment back. You have the tax write-offs of your property taxes and your mortgage interest. So a lot of times people, will think that it's out of reach for them, as far as what their monthly is. But if you do some analysis and really figure out what you're paying for your income taxes and adjust those, knowing that you're going to have a property tax and mortgage interest write off, then a lot of times, talking to a tax accountant can help you work those numbers and figure out what you could be comfortable with on a monthly payment. And then, as I went over before, sometimes your payment can actually go down, which is just such a bonus. And I know that's happened to me numerous times. When I bought my first home, interest rates were in the eights. Right now we're in the sixes. But if they go down even, half a point or 1 point, you refinance, your payment goes down. It's pretty nice. Of course, your property taxes typically go up, but not that much if you're buying an older home. And then I think the best reason is really just wealth building and generational wealth, which I think is really important. According to that survey of consumer finances, the median homeowner has 40 times the household wealth of a renter. So a homeowner has a median wealth of 255,000 and the renter only 6,200. So it's quite a big disparity. And so that's why I just can't stress enough how important it is to just try to get into that first home and start building that equity as soon as possible. Next. So to get ready on what you need to do for the next one is really just ask yourself, what is it right for me at this time? Determine what you can what you can afford, and then getting pre-approved is really of utmost importance. So you really want to build your team, your realtor, your mortgage broker, your mortgage lender, the credit union. I'm a member of the credit union. I absolutely love them, and they've got great programs and knowledgeable people that can help you with the process and talk to you about what you would get approved for. It's really important to do your finances and do your budget and figure out what you are comfortable with the payment, and then they can help you work the numbers on what you might need for a down payment, and to make that realize that monthly payment. So yeah, building your team of your lender and your real estate agent is really the first two things, and then getting pre-approved with the mortgage professional.
Okay, so when we talk about how much you can afford, the standard rule is keeping housing costs around 35% or below of your monthly gross income. Gross income is everything that you make before taxes come out. So, just that is what your employer is paying you before, your retirement, insurance, all that stuff comes out. And then this payment should also include taxes, insurance, and costs like PMI and your HOA. PMI is private mortgage insurance. It is generally required if you do not put 20% down or more. And then your HOA costs will vary based off of the home you're looking at purchasing and the HOA requirements. They can range greatly. I know when I was shopping, it ranged from $50 to $400, and that is all part of that monthly home payment that should not exceed that 35%. So how much can you afford? So this is a really great graph of just an example of how much you could afford based off of annual salary. Everyone's salary is different, right? So this is just to kind of give you an idea of how to calculate what your housing costs should be. So for example, if your household makes $80,000 in a year, you divide that by 12, and that's about $6,666 a month. And then you multiply that by 0.35. So if you make $80,000 a year, your housing cost should not exceed $2,300. So again, just kind of use that formula to get a good idea of how much your housing cost should cost you. All right, down payment requirements and PMI. So 20% down or more avoids PMI. 20% is a lot of money for the average person. It is very unusual for first-time homebuyers to have 20% down. So that's why there's a lot of other, down payment assistance and other programs available. That's why if you only have 10% down, put that down. Great. It's going to still get you into your house. You will have that PMI amount that's added. But then once your home either increases in value or you pay your loan down, once you hit that 20% in equity, your PMI will actually drop off. So it's going to give you a cost savings. So it's, even though you have that extra cost, it will eventually fall off as long as it's within the loan's guidelines. There's a couple instances where PMI is required for the length of the loan, and we'll go over that shortly. All right, home buying loan options. So there's a few different options, and this is just a very high level look at different loan options available. So there's the conventional mortgage. This is the most common mortgage that is offered by institutions pretty much everywhere. Your terms, which is the length of the payment, ranges anywhere from 20 to 30-year terms. And then usually you can get away with putting 3% or more down towards your payment. A lot of them are fixed rates. Again, there's no PMI for down payments of 20% or more. Then there's an FHA mortgage. This is federal housing assistance or administration assistance. So again, 20 to 30-year terms, they require 3.5% down or more. And then the loan amounts are restricted and vary by income and the county. And I'll let Christy and Peggy tackle that if anyone's interested, but it will vary based off of median income and the county in which that income is calculated. And then mortgage insurance is required for the life of the loan. So that's that PMI. Then there's the Veteran Affair mortgage, so VA mortgage. This is for veterans who have served 90 days consecutively during wartime, 180 days during peacetime, or 6 years or more in the reserves. There are minimum property requirements. So for example, you can't go and get a VA loan for a complete fixer upper. So it's, if the property is completely dilapidated and you're like, okay, I'm going to just completely redo this to my liking, it's probably not going to get approved because it's not habitable. So definitely, follow those minimum property requirements. However, there's a lot of great benefits to that VA mortgage. So there's no down payment and there's no PMI. There's also a few nonprofit resources out there that you can take a look at. There's CHFA, which is the Colorado Housing and Finance Authority. I have placed their website on here. They can help with home purchase loans. There's often education requirements. So something like our home buying workshop would not fit their education requirement. They actually have very in-depth, like more in-depth than what we're talking about today, education classes on the weekends. I think it's between 5 to 6 hours. And it has to be a HUD approved program to qualify for FHA or CHFA loans. They are all available in Spanish, and you can find those education offerings on their website. There's also grants and loans for down payment and closing cost assistance. Again, income limits apply. There's also low-income rental housing and foreclosure prevention resources. Again, Colorado Housing Connects is another great nonprofit resource. We have worked with them in the past. They can connect clients to free resources across Colorado related to home ownership, renting, home repair and maintenance, fair housing. So like if you've ever been discriminated against in terms of like buying a house or renting, they can definitely help you with some of those issues. So when you're going through the home buying process, there's a couple of do's and don'ts. Number one, keep in constant contact with your lender. They are the money bags that are going to get you into your home. So making sure that your lender has all of your up-to-date documents. So that's could be pay stubs, taxes, any of that pertinent information. Make sure that they have the most up-to-date docs. That way they are able to help you in the quickest manner possible. And then a couple of don'ts. Don't incur new debt. When you are shopping for a mortgage, you do not want to do anything that could negatively impact your debt to income ratio. So that is how much debt you hold on a monthly basis and pay on a monthly basis compared to your monthly income. Do not spend your down payment. If you have, thousands of dollars sitting in a savings account somewhere, and you see like a fancy new thing, don't dip into that. You want all of that all those funds for your down payment. Don't change jobs. And really this should say don't change careers. So say, for example, I am a marketing professional. I could stay in the marketing profession. Maybe you get a promotion. That's great. But I wouldn't want to go from a marketing professional to maybe, like, I don't know, it's selling insurance. It's going to be required that you show at least 2 years of income from that job. And then don't make changes to your credit that could impact your loan being approved. So don't go take out a new credit card loan, or don't go, buy a new car while you're shopping, unless it's an absolute emergency. So like if your car breaks down and you have to go get a new car, you know, that's a different situation, but you don't want to be messing around with that. I am aware of a situation where somebody was pre-approved. They went shopping for all new furniture for their new house. They financed it through the furniture store. And when it came time to close on the loan and everything was redrawn, it was found out that that person was no longer eligible for their loan and the deal went sour. So just a little bit of a cautionary tale. So other costs to be aware of. So you have your down payment, you know, that's a lot of money, but there's other costs that you need to start calculating for. So there's closing costs. Usually that's between 2 to 3% of your purchase price. That does not include prepaids. If you're unfamiliar with what a prepaid is, that is going to be a prepaid cost, like your homeowner's insurance, you know, initial deposit into your escrow account. It could even be an HOA transfer fee. So that's paid up front when you sign your loan. The buyer will be responsible for any appraisals and inspections. There may be a situation where you have to put earnest money down. That basically means that you are putting, you know, a couple, maybe like $1,000 down, and you give it to the person who is selling their house. And it basically says, I'm serious about purchasing this property. Usually the buyer does not pay the realtor, and that could vary by market. Irene, correct me if I misspeak on any of that, but the seller usually pays title insurance and pays all realtor fees. There are closing costs for both buyers and sellers. And then there may be other fees that exist, like, you know, HOA transfer fees, the flood insurance, and any other kind of required fees that are associated with your property. Irene, this is you, unless you want me to take this one.
Yeah, or Christy, if any of those guys want to chime in about getting pre-approved. Going, yeah, I'll take it. Sorry, Rachel. So when you build your team of your realtor and your lender, you want to talk to that mortgage broker and get pre-approved. And you've already got your budget hopefully figured out so that you know approximately how much you can afford. And then you come to them and you submit all of your paperwork. And I think Christine and Peggy can talk to what some of the documents are. Most of the times I just tell people to bring their 2 years of tax returns, pay stubs, and you know, just have their financial picture for the lender. And you will need a pre-approval letter to go out before you go viewing properties. It's a good idea to have that ready to go. And you will need that once you're ready to make an offer, because sellers won't consider offers without knowing that a buyer is pre-approved and has seen a lender, and has gotten their credit pulled and has all their ducks in a row. So I can't stress how much, you know, you guys are all here to learn about this, and it's great. And if you're really, you know, starting to think about it and maybe you're even a year out, it doesn't hurt to talk to a lender sooner rather than later and start lining up the pieces to know what your credit rating is, what you need to work on, documents that you need to provide. You know, maybe what you really want in a house is going to require you to make more money. Maybe you're thinking of career change, things like that. So you want to, you know, start investigating that, and it's never too early to start. Yep, there's our team of mortgage people. Do they want to say it?
Christy and Peggy are our experienced team of mortgage loan officers. They have a combined experience of over 30 years, and they're available to any of you if you have any questions regarding the mortgage process. Their personal emails are available on here, phone numbers, and then of course, mortgage@mising will go to both of them. So please don't hesitate to reach out.
So once you get pre-approved, that is the first big step. And of course, you've been saving your money and lowering your debt and improving your credit. And so you should be ready to go. Listing your housing priorities is a really good idea to do. So you want to make sure you have your list of must-haves or nice-to-haves. And there's a list in their packet that they will have. to work
Yeah,
on that?
everyone will receive a follow-up email with some really great resources. We have a home buying guide that is really useful. I used it personally when I went shopping for my home, and that checklist is top notch.
Mhm. And of course, you're not going to find everything that you're looking for. You have to be willing to compromise, especially as a first time home buyer, and knowing that this is really just a stepping point for you. And there's probably no such thing as a forever home anymore. We typically, as Americans, move between every 5 to 7 or so years. So just keep that in mind. I've had clients make spreadsheets for themselves, and that's a great thing to do and to have when you're going to view houses, and you can see how each house measures up to that, to all of your criteria. And then, you've got, hopefully you have your team with your lender, and then choosing your agent. And there's some good questions in your packet as well on what to ask your agent, and to help you choose someone that you're comfortable with, who's reputable, who comes recommended, experienced, has a lot of honesty, integrity, and is really going to be in your corner throughout this process. And so it's really up to you to choose that person. There's definitely a lot of us out there, and a lot of choice, for you to pick. So if any of you, we'll stay on the call after this, so if you guys have questions for any of us, Christy, Peggy, or myself, we'd be happy to answer. Then, once you do have all those ducks in a row, we go out and we view houses. First viewings typically happen online. I usually set people up for a search that comes straight from MLS, and then we look at those online to get a feel for what is important to you, and what you want to see in your home. And then we schedule between 6 to 8 showings the first round. Hopefully we have enough houses in your price point and in your criteria to look at that many that day. And then going forward, we kind of see what comes on the market. If none of those work, we kind of see what comes on the market the next week and the week after that. So, and then once we find one that you like, hopefully love, but typically it's one that you like as a first time buyer, making compromises is really important, like I said. Then we make the offer, and we write that up on our documentation. We submit that to the seller. As a first time buyer, it can be a little bit challenging and overwhelming writing offers, but just know that you have your trusted professionals in your corner, and they're going to take care of all of that for you. The one, in the past, we've had a lot of competition, and it's been very challenging. It has changed pretty dramatically recently, so things are better for first time buyers. So I think that you guys are in a great spot right now. The market has shifted a little bit, so you've got some breathing room before, in 2020 and last year, through last year, we really were just, it was just a frenzy and a very difficult time. But you do have to prepare yourself, and prepare yourself mentally for maybe being disappointed and not getting that first offer, and that's okay. So you keep trying, and something eventually will stick, because especially if you're a buyer that's kind of particular, there's going to be a lot more competition for those types of homes. So keeping your options open, and just being, very flexible with your timing, with your criteria for your home. Obviously, it's all price dependent. So, yeah. And then once we make an offer, we hope to secure that house for you. And then there's going to be some negotiations, and then inspections and appraisals, and a lot of deadlines and things that your lender will require as well. And then we move on to closing date, which is usually the happy moment where everybody signs all their paperwork. It usually happens at the title company's offices. Sometimes it happens remotely. And then you typically get your house that day. Possession date is a lot of times the same day as closing day, but not always. So that is kind of the process in a nutshell. And then there's a lot of steps after you go under contract, that we'll go over in a bit. As far as choosing an agent, how does that go? And Rachel, just bought her house recently, so maybe she could, we could ask her what questions, like how did you choose your realtor? How did you decide who you wanted to work with?
Yeah, so I actually interviewed, I think, 3 or 4 agents. Most of them came as recommendations from Christy and Peggy or family friends who have recently purchased a home. So what we did, we set up calls or did in-person meetings just to kind of meet each other. And my husband and I chatted about, what was important, why we were doing this. I think it's just really important to be really honest with whoever it is that you choose about what it is that you're looking for. Any fears. I mean, this is a big purchase and it can be, again, like what Irene said, it could be really nerve-wracking. So it's really important to be upfront with that, because then they can take that and make sure that they are addressing those concerns and make you feel really comfortable. And it's really important that you find a realtor that you gel with. So making sure that you understand how often that you're going to be communicating with this person, what your expectations are, what their expectations from you are, if they send you some properties to look at, like they might need you to go on and like look at those properties if they think it might be a good fit. Because your realtor is somebody you're going to be spending a lot of time with when you go and look at houses. So that's really what I looked for. I wanted to make sure that we gelled well, that they had kind of an open communication policy. I was able to text our realtor and her team really any time of the day, and I could always expect a text back probably within an hour. Yeah, that's what was really important to me, and just making sure that, they were realistic, because I'm a realistic person and I wanted to know any kind of hurdles and whatnot. And, it's really good to have a real estate agent that will be honest with you, because at one point when I was searching, they were like, I think you may need to maybe increase your price. And again, I was looking at the height of our housing market here, so it was really, really competitive. So having that really honest voice kind of guide us really, really helped us.
Nice. Yeah. Someone was asking if the PowerPoint's going to be sent out, Rachel. Is that
Yes, this will be available to everyone. Were there
okay?
any other questions?
No, that's all I saw.
Okay. Mhm.
Yeah. And so so as far as what a real estate agent does, what we do is we're your trusted advisor. We guide you through the process. We negotiate. We advise you to seek other advice, other professionals, like when we, do inspections, and we have a list of people that we can provide you if you need to do inspections. We guide you through the appraisal process, and also inform you of any pitfalls and things that are red flags. We really are in your corner, looking out for your best interests and negotiating on your behalf. So that is what we do in a nutshell, along with a million other things. Can you go back one, Rachel?
Yep,
Sorry.
sorry.
And we, once we go under contract, we make sure that we're sticking to the letter of the contract to protect your earnest money. Earnest money is required on every purchase. And that's money that doesn't get lost. It goes into a trust account and sits with the title company usually. And that gets applied to your down payment at the end when you go to purchase the house at closing. And then as far as what a realtor is, most real estate agents are realtors as well. That means we just belong to the board of realtors. We've got an ethics code that we follow. There's classes and continuing education that we have to take every year to stay licensed. As far as who pays an agent, like Rachel said before, it's typically the seller who does. In very rare circumstances, it could be the buyer, but it would be something that you would know about much ahead of time, very, very much ahead of time. So it is 99% usually paid for by the seller. So Yeah, and then, interviewing your future agent is a really good idea because you do want to make sure that there is a fit and that they're a good communicator, a good negotiator, and you'll have a list of questions in your packet that you're welcome to ask the person. Just decide what's important to you. Do you want someone who's very experienced? Do you want someone who is available 24/7? I hope none of us are, but you do want your person to be available as much as possible. And, responding within the hour, I think is really, very reasonable, especially when you're in the throes of this process. So I think that those are all things that make a good agent, somebody who's in your corner and looking out for your best interests is available. So, and let's see, setting your housing priorities, that you're going to have this in your packet as well. Definitely decide what your must haves are, and then your like to haves, and then what your deal breakers are as well. So, if you absolutely do not want to live on a busy street, make sure you let us know that and be really honest with us. We're your advisor. We work for you, so it helps both of us to know which houses that we want to show, because we're housing matchmakers and we want to show you only the ones that really match your criteria. And then, of course, make sure that you compromise. Don't be too picky, because our housing inventory is not great right now. I just looked up today, this morning, we have about 4,800 homes in the 7 metro counties in Denver on the market. And that probably doesn't mean a whole lot to you guys, but that's only 1 month of inventory. To have a balanced market, we want to have between so that means we are in a seller's market still. To have more of a balance between buyers and sellers, where we can have, more negotiating power for buyers, we'd want to have between a 4 and 6 month supply of inventory. And in 2000, before the market crashed in 2008, we had approximately 20,000 homes on the market. So it's a big difference right now. And with the supply and demand, you just really want to be really, really flexible on what your priorities are. So, and being realistic within your price point, obviously. Next one. So then when we go out to view houses, some do's and don'ts there. Definitely treat the homes as you would want someone to treat yours if you were coming, if they were coming into your home to visit it and take a look. Evaluate the neighborhood and surrounding areas. Set your healthy expectations, like we talked about, budgetary and otherwise as well. I think it's important to shop at or below your price point to allow room for if there are multiple offer situations. And then just to let you guys know, there's more multiple offer situations in the springtime market, which is right now. Things are a little bit better in the heat of the summer, when we have more inventory and less buyers, because our state is so rec heavy. A lot of people go out of town. So, if you're planning ahead, a better time to shop for first time buyers would be in the, August through the end of the year time frame situation. And then being objective about your wants, needs, realizing that there's definitely no perfect house. And then when we're in the houses, make sure that you just assume that there are cameras in every property. There aren't, but a lot of times there are, and the Ring doorbells, and so don't talk about the house unless it's to say something positive about it, and we can talk about how you really feel afterwards. But definitely, even if you're not considering it, you just want to be real respectful of the seller. And if it is one that you really like, we also don't want to be gushing too much about the house, because that might compromise your negotiating position if we have room to negotiate. So just, really keep it simple and keep your comments to yourself, and then we can talk when we're outside of the house. Then we don't want you to touch the seller's belongings or their furniture. Don't dwell on the seller's personal photos or their objects. They're going to have those around, but try to take that out of the equation for yourself and try to picture yourself and see if you're able to live there, and if this is, the energy is right and you feel good about it. So, and then don't bring too many people with you on the tour, especially since COVID. Sellers don't really want that many people in their house. So really the primary decision makers. And if we decide we can go back a second time for second showings, or if we go under contract, you can bring family members after that. And don't be late. Simple. All right, so then this is more of the nitty gritty of after your offer is accepted. Obviously, congratulations are in order, and then the real work really begins here. And your real estate agent and your lender are going to be in your corner every step of the way to help you and guide you and protect your best interests. So after your offer is accepted, that's when you owe the earnest money. Typically, that is 1 to 2% of the purchase price. And that will sit in the title company's trust accounts usually and get applied to your down payment at the closing table. So make sure that this is an amount that you have that is sitting in your checking account that you can write a check for, or perhaps even wire transfer the monies into that account. And then just know that that money is protected really well in the contract. Our real estate contract in Colorado is very much geared toward protecting the buyer. So we've got a lot of deadlines, and there are contingencies built into the contract and ways for you to get out of the contract if something goes awry. For example, the inspection is the big one. And we typically recommend for buyers to do a general house inspection, a sewer scope, and a radon. Hopefully not a structural inspection. But if your general inspector recommends it, then that would be something, but that's pretty rare. So I would budget probably $500 to $800 on inspections, and that would be those 3 that I mentioned. And then after the inspection, there might still be some negotiating that goes on where we ask the seller to fix certain things or give a credit to the buyer so that the buyer can fix those things later, or maybe even lower the purchase price. Depending on market conditions, depending on if the seller had other offers on the property, things like that, you might have some room for negotiation after the inspection. Then your lender orders the appraisal, and the appraisal has to come in at purchase price or above. If it comes in above, then good for you. You've got some equity in the property. If it comes in at value, we're happy. If it comes in below value, that's when we have a problem. And hopefully that doesn't happen, but we talk about that when we are writing the offer, and we run comparables on that property to make sure that we're not going to have a problem on appraisal. Of course, the appraisal process is a subjective one, so it really depends on the appraisal, how well they know the market. We're not really in control of that process, and neither is your lender. They typically have to go through a mortgage company or an appraisal management company to pick the appraiser, so they're really out of the equation as well. And hopefully they do a good job, and typically that is the case, and the house does come in at value. If it doesn't, then we go back to the seller, try to get them to lower the price, or you always have the option of backing out of the contract and getting your earnest money back. So all the contingencies are built to protect you, the buyer, and they're stopping points so that you do get your earnest money back if for whatever reason things go south. And then same thing with your final loan approval. Throughout the process, your lender will be asking you for more documentation, and you'll be filling out loan documents with them once you go under contract. And once that loan is approved, they send it to underwriting, it gets approved, and then you move to the closing table, and that's when everybody signs all the final documents and you become the owner.
All right. interaction time.
That's an
Does a
easy
buyer,
one.
yeah, does a buyer have rights to terminate a contract once it's fully executed? True or false?
Just trying to see if you guys are awake still. Did I put them to bed?
Any guesses? And we have one false, and we have a false answer in the chat. Irene, do you want to take that?
The rest of them went to sleep, I think. Yeah, the buyer definitely has rights to terminate the contract once it's executed. You've got, yeah, look at that. Someone else answered. Yeah, you do. You're very well protected within the contract. So if something happens and with one of our contingencies, like the inspection, the appraisal, the loan, you do have rights to terminate as long as we stay within our contract deadlines.
Okay,
All right.
next one.
Closing day. That's the best day. So yeah, you're almost done because then moving and the fun stuff begins. And typically we do meet at the title company and then sign all the papers. Since COVID, people have been doing separate closings. So the seller will sign on a day that's convenient to them, a buyer will sign on a day that's convenient for them. And then all the money is transferred that day through the title company. And it's done through wire transfers. You do bring in your down payment. So your lender and the title company work out their figures and they'll give you a bottom line number that you need to bring that day, either as a wire transfer or a cashier's check. Typically it will be a wire, and your realtor will help you set all that up as well. And then you might get possession the same day or you may not. Just depends. If it's a vacant house, typically you do, but if a seller lives there, they may negotiate to have some days to move out or even a couple of months to find another house, up to 60 days. So sometimes there's a post-closing occupancy agreement, which is kind of like a lease per se, where you are technically going to be the landlord for that month or so while the seller is moving out. And depending on market conditions, we sometimes want to be flexible and allow the seller to have that. These days, they're not as common as they were the last couple of years, so that's good. We want to have possession day be the same day as closing. It's usually more advantageous to buyers.
All right. What kind of market is Denver experiencing? Buyers, sellers, or flat?
I answered that. You guys, come on, that's easy. Yeah.
Yes. It is a seller's market just due to the low inventory and high demand. Goes both ways.
Exactly.
And
Yeah,
then
exactly.
how many total listings are currently active on the market in the Denver metro area? Everyone take a wild guess.
Do, 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 do. Ooh.
Correct. Irene, I think you said 4,800.
This morning we had 4,801, and that's condos and townhomes in the 7 metro counties. Yeah. So this is a really handy, snapshot of the market that I think people like to see, just to give you an idea. And so these numbers are for March, and they break down with detached and attached homes. And so that you can see how many detached versus attached were on the market in March of this year. And then MOM is month supply, month over month, whether it increased or decreased, and then YOY is year over year. So month over month, we increased in our actives, which is great. And that typically does start happening throughout the springtime. January, February, we're usually really low months of inventory. So it's going to start going up until, through the summertime. So I would recommend, if you're a first-time home buyer, it's really advantageous to you to start getting your ducks in a row now, but then, start really looking July, August, and get under contract then towards the end of the year. Oh, can you go back, Rachel, and talk more about this? Because I think there's some really good stuff here. The close to list price ratio a little bit further down is 99%. So most homes are selling for 100% of what their asking price is. And that is down year over year, where 7%. So last year around this time, homes were selling for way above asking price. So that's good. And it's a great advantage toward buyers. Our average sold price is 738. That's up 2% in March, but it is down 6% year over year. So another nice advantage right now. And I don't know if you guys know this, but the last couple of years, we've experienced 20% appreciation rates year over year in 2020, 21. So this is a nice breather for us, and to be able to get some first-time home buyers under contract, which hasn't been the case the last couple of years. Median average days on market down towards the bottom, and then median days on market. So we're at average of 39 days on market, which you can see year over year, that's up 254%, because we were like 7 days on market this time last year. And it's nice, because you want to be looking at, average days on market, and then month supply of inventory, which right now we sit at a month of supply of inventory down there, which is up 171% from last year. So, but that month supply of inventory is going down because we are still in a very strong seller's market. So just prepare your mindset as a first-time buyer that you might be disappointed the first couple of times of writing offers, but it is very doable for first-time buyers to get under contract these days. So just, get everything lined up and hit the ground running, and get out there and start looking and writing some offers and getting yourself under contract. I think it's really a good time, a much better time. And interest rates, what are we at? That's a 6.97, which I think is really high. I don't think it's that. Christy, what are you guys seeing? Are they still on? I'm not sure.
We were actually, our 30-year was at 6.625 this morning.
Oh, good. Okay. That's pretty good. All right. Wrapping it up for you guys. Are they still awake? We got 5 minutes. Does anyone have questions, comments, fears?
I don't see any questions in the chat right now.
All right, and we can hang out if you guys want to unmute and say anything. We're open to it. We're happy to answer. We love to answer questions. Rachel, do you have anything else to add?
I guess, Irene really hit it on the head. Just kind of go in and understand that, having your first offer accepted is really unlikely. I don't want to say it that way, but it always works out in the end. Yeah, you'll find the right house for you, and sometimes it's shaken out by who accepts your offer. I was actually one of those people who got their offer accepted because of a post-occupancy period. I was able to offer that. So, just be flexible, and your realtor will be your best friend through this whole process.
Yeah, we just had a question come in saying that, is there a real difference between a buyer agent or a seller agent?
Yeah, I guess I can speak to that. And I want to make sure that I have your question correct. So if I don't, then just unmute and chime in. But I'm wondering if you're asking if there's a difference between getting your own buyer's agent or just going with whoever the listing agent or the seller's agent is in purchasing the property. Is that what you mean, Sheila? Yes. Okay. So yeah, so I think there is, because your buyers, okay, so the way that it works is, as a listing agent or a seller's agent, I have a relationship with that seller. I put the property on the market. I know I have that relationship with the seller for probably a while before we put that property on. I represent them and their best interests. If a buyer comes in unrepresented and, you know, through an open house or through some other method of marketing that I've done, and they come in and they don't have an agent and they want to just work through me, that's fine. I prefer that they get their own buyer's agent because that's somebody in their corner that is working for them and looking out for their best interests. I still have to treat them fairly, and I would change my role and become a transaction broker where I'm not representing the seller anymore as their coach and being in their corner. I'm more of a referee and just facilitating the transaction. So there's no reason not to get a buyer's agent because, you know, there's so many benefits, and that person is representing your best interest and getting paid by the seller. I hope that answers it. And then I'm looking at another question. If it doesn't answer it, Sheila, let me know. Oh, thank you. You're welcome. Is the process different when looking to purchase a new home versus an existing home? That's a good question. And yes, it is. An existing home is a process that we control more as realtors, and we use our standard language in the real estate contract to protect you. A new home comes from the builder. The contract is written by the builder's attorneys, and it's usually very much geared for the builder. So you're not going to have as many protections built into it. And typically, you know, it's very much skewed towards the builder. So it's a different contract. As realtors, we are still licensed to go over that contract with you, point out any caveats and pitfalls. Of course, we're not attorneys. So if that's something you want to have an attorney look over, then we're going to advise that as well. But you're still going to owe earnest money with that new home construction. And then you might owe some additional monies at certain points in the contract if you're going to be picking out finishes, and at certain points they require you to put forth more money. And then your earnest money or those deposits become non-refundable. So we as realtors will go over that and point out when that happens. And you have to be just, you know, okay with taking on a little bit more risk when you're buying a new home.
Additionally, generally, if you're looking at a new build, you have to get pre-approved through the builder's lender first. That does not mean that you have to finance through them. It just basically means that you are jumping through the builder's hoops and meeting their standards for criteria. Then you can generally get financed through the lender of your choice. Additionally, especially with the market right now, you will see that your price is not locked in once you get pre-approved, because, you know, building materials can go up and down in cost. So you might see a house that you like, for example, for $500,000. And then by the time it's built, you know, those costs go up month over month and you end up with a much more expensive house. So that is another thing to keep in mind with new builds.
Great. Glad we answered that. What else do you guys have? Wednesday. It's Wednesday hump day. Who might responsible, better positioned for helping a lower income buyer apply for down payment for DPS assistance? Is that, you mean down payment assistance, or DPS as in, are you a Denver Public School teacher? I'm assuming you mean down payment. Okay.
Down
yeah,
payment.
Christy,
would you like to take this one?
Christy doesn't have the ability to talk. She's in a branch without that. So
okay.
So there's several ways we have programs right now that we have that can help with down payment assistance. So they can apply through us and we can see if they qualify for that. If that doesn't work for them, then we work with our partners at Centennial Lending, and they work with Jaffa, which you mentioned earlier. So those are the two best ways to work for getting the down payment assistance.
Also, I will say that there are also some nonprofit organizations that are out there. One that I work with, and I'll put the link in the chat, is called Project I See You, and we provide $10,000 grants to women, typically women of color, to get towards home ownership. So, you know, that could be something. There's an application process on that website that if you qualify, that could be an option of $10,000 grant money. If that helps.
Any
And
other
so-
questions? Go ahead.
So they'll get all of our contact info and they can reach out. If
Yes.
you guys have a private phone call, private conversation with any one of us, we would love to hear from you.
Yes, so everyone who participated in today's class will receive a resource email in the coming days with the full PowerPoints. Again, our home buying packet, which has those checklists that are really, really helpful. I really suggest that you use those, as well as contact information for our mortgage lending team, as well as Irene. And if there's no other questions, I do believe that wraps up our presentation today. Thank you to everyone who has attended. I hope that you are walking away feeling more confident in the home buying process. Oh, it looks like there might be a couple more. Nope, thank you. Yep,
Thanks for coming. We really appreciate it. Hope to hear
thank you.
from- Bye, Rachel.
Bye.
Bye, everyone.